Hash Sagafi, Liberty Home Mortgage. I love my Revolution light board. This thing's awesome. I still have to learn how to use it better. But anyways, this topic, I'm going to tell you about the basic things it takes to get a loan. Why is this so important? And why do I go over the same thing 800 times? Why? Because I was taught in the sport of wrestling, the world's oldest and greatest sport in the history of mankind, that you have to do repetition thousands of times until you get good at something, okay? So if you're sitting here, especially for people that say, Hash, I've never done this before, I've never bought a house, I don't know what to do, pay attention to this video and take notes. It starts with this. There are 3 things to get a mortgage loan. Write this down. Number 1, credit. Number 2, income. Number 3, money. These are the 3 things it takes to get a loan. Credit, income, and money, okay? Now let's break that down one step further here, okay? Credit. Credit determines if you can even get a loan. So the lowest credit score I've ever seen in my 24 years of doing this wonderful job, okay? 24 years. The lowest score I've ever seen was a 413. Now credit is broken up into the credit score and the credit history. So we have the score and we have the history. It's broken up into the score and the history, all right? Now, I've seen people with 570 scores, but their history is actually very good. When I say history, what am I talking about? I'm talking about how well have you paid your bills? That's your history, okay? Now, if you say, Hash, I've never had a credit card, well, then you have no history, okay? You're not going to generate a credit score if you have no credit at all. Maybe I'll go into that a little bit later. I might go off on a couple different tangents, but that's okay. Just keep watching. You're learning, okay? We're talking. We're having a conversation right now. You and I, or myself and the camera, and hopefully you're watching this thing. So you have the credit score and the credit history. I've seen people who have a 680 credit score. They've got a solid score, but they don't have the history. What goes into your history? As an example, bankruptcy. You say, Hash, I have a Chapter 7 bankruptcy that was discharged 2 weeks ago, okay? You have to be reasonably 2 years from the discharge date of a bankruptcy to have an attempt at even getting any kind of loan to begin, whether, beginning there, it's FHA, VA, we start going through some of those loans there, but you might have the score, but you don't have the history. You might have a good history. Hash, I've never had bankruptcy. I've never been foreclosed. I don't have any collections. That's fine, but you don't have the score. I always tell people this. Just because you have a low score doesn't mean that you won't get a loan. And just because you have a high score doesn't mean that you get the loan. That's because we're looking at the total picture here. Keep that in mind. Credit is the first step. And if anxiety is pouring over you right now and you're sitting here saying, my credit's just terrible, okay, do something about it, okay? Instead of sitting here all day crying about it and doing nothing, do something about it. And that's probably another topic I gotta go over. Anyways, credit. Credit determines if you can even get a loan, okay? Now, let's talk about income. Income determines how big of a loan you can get. Income, similar to credit, is broken down into 2 parts. It's the amount of income and it's the source of the income. As an example, there's the amount and there's the source. So it's the amount of income. How much do you make? As an example, people will say, Hash, I get paid $30 an hour. They'll say, Hash, it's $30 an hour, okay? $30 an hour, I'll go like this, 30 an hour times 40 hours a week times 52 weeks, like so. That's going to work out to about $62,000 a year. I actually don't have a calculator on me right now. So if you want to check me and be like, Hash, you're wrong. Okay, good. $30 an hour times 20 is about $62,400. I think if you want to get crazy, maybe I'm a little bit off. I don't think I am. It's $62,400 actually, I think, if you want to get nuts, okay? Hash, I make $30 an hour at my job. I work full-time 40 hours a week. All of a sudden you say, but I get paid cash. So my source is cash. And if my source is cash and I don't claim any of it, I got news for you. You might get $30 an hour and make $62,000 a year. But if you don't claim any of it because it's all cash, here, that's the source, I can't use it for a loan. Similar to credit, you might have the amount of income might be there, but the source might not be an eligible source. To all of my loan officers watching this, okay? This is where loan officers get themselves into trouble. I'm going to tell you this one. The number one issue probably in the mortgage industry today are income and employment issues. It's customers tell loan officers, I made 80 grand last year. the loan officer uses the 80 grand to qualify, and all of a sudden when you start diving into the source of it, the amount of it, the consistency, the stability, and all these other things, doesn't qualify. Causes huge problems, okay? Income is the second one. Credit determines if you can even get a loan. Income determines how big of a loan you can get, okay? Pay attention. These are the different steps. Talk to a loan officer who knows what they're doing, especially a loan officer who can do this lecture standing upside down in their head. That one's probably the one you want to talk to most of all, and especially when they're licensed to do business in 45 states. Besides that though, money, step 3 of it, okay? Money. It takes a little bit of money to buy a house. If you want to buy a house, are there no money down programs and down payment assistance programs, and we can get the seller to pay the closing costs and things like that? Sure, have at it, yes. But the bottom line is, you're going to pay for an appraisal, okay? There's a fee for that. Home inspection, not necessarily required, but highly recommended. There's a fee for that. You want to start getting into down payment. Guess what? The zero down programs, they're not that easy to get into. The down payment assistance programs, they're not just handing sacks of cash to money, okay? It takes money to do this stuff, all right? So money determines, well, money is needed to buy the house. Money's broken down into a couple different parts. We also look at the actual dollar figure of the money, and I break all these down into 2 parts to begin, okay? So for example, for money, I'll break it down into the dollar figure and the source. If you say, Hesh, I've got $80,000 to put down, but it's in a shoebox under my bed, it's all cash, the dollar figure is perfect. That's what you need, okay? The source, we can't use cash. Cash is no good. No good on cash. Pay attention to these points. Credit determines if you can even get a loan. Income determines how big of a loan you can get. Money, it takes money. Credit, income, money, okay? Each one is critical to getting a mortgage loan. Now, on the credit side, there's 3 credit bureaus that we pull. There's Equifax, there's Experian, and there's TransUnion, okay? There's 3 credit bureaus in the United States. Each one scores you differently. They score you from 300 to 850, each one. A good lender is going to pull all 3. And if you want a definitive yes or no, not just a guess or a pre-qualification, you want a good answer, it has got to be a hard credit pull. And people watch me like, Hesh, is this a hard pull? Yes. You want to see if you want to buy the biggest investment of your life, and if you want a definitive answer. Definitive, okay? If you want to get a health checkup the right way, get your butt to a doctor and go sit down over there in that waiting room for 30 minutes. Does it suck? It sucks. I'll tell you what, when you get that health checkup and they tell you something's wrong, the best type of medical advice on the planet is medical advice that catches anything early on, not late in the game. If you ever had health issues, you understand what I'm talking about, but it's a hard pull. We pull all 3 credit bureaus, Equifax, Experian, and TransUnion. There is something in my industry that is the newest thing that's come into vogue. It's called a soft credit pull, okay? Soft pull, it doesn't affect your score. And people say, I don't want to affect my score. I got news for you. The scores on the soft pull are not always the same as the scores on the hard pull. There's also an automated underwriting system that you have to run everybody's information through. And those automated underwriting systems will not accept soft credit pulls to give a lending decision on the loan. So for all the loan officers out there watching me who are too cheap to spend the money to properly vet the borrower, too bad, okay? And I know a lot of loan officers get upset if I say that or when I say that. That's just too bad. You want to do business the right way, listen to somebody who knows what they're doing, who's pretty successful in this industry. It's a hard pull. It's on all 3 credit bureaus. If you're a customer, you're looking to buy a house out there, you want an answer, and you want that answer before you spend money on appraisals and inspections, and maybe you give earnest money that's non-refundable. You want to go do all of that, but you're terrified of a hard pull. One hard pull affects your credit 2 to 5 points, okay? So 2 to 5 points, that's all we're talking about here with the hard. But we pull all 3 bureaus, Equifax, Experian, and TransUnion, okay? All 3. Now watch this one. I'm going to erase this here. Credit scores. There's Equifax, Experian, and TransUnion. each one generates a score or a number, 300 to 850. As an example, Equifax is going to give you a 634. Experian is going to give you a 691. And TransUnion is going to give you a 653. So those are your three scores, okay? Now the question becomes when we pull all three, well, one question is why do you have three different scores? The reason you have three different scores is each bureau uses a slightly different algorithm to arrive at the score, and not all creditors report to all three bureaus. So a lot of times a collection or a collection account might only report to two of the three bureaus, or maybe only one of the three. So they don't always see the exact same picture. So they see a little bit different picture, slightly different formula, different credit scores. We pull all three. It's a hard pull to do this the right way. Rewind it if you want to watch me go off my tirade again on that one. Anyways, which one of the three do we use? We use the median. We use the middle score, okay? So in this case, I would say your score is 653. Now, the truth is that your only score? No, there's three. But we take the middle one. We see, does that score qualify you? Is that a good qualifying score? If you're telling me that you're going conventional, a 3% down, if I say conventional 3% down home ready loan, Danny me first time home buyer loan, I got news for you. You're sitting at 653, you're going to have a super hard time getting approved for a conventional loan. I don't care what they call it, or if you're a first-time home buyer and you feel all warm and fuzzy. You have a real hard time, okay? But we pull all three, we take the middle number. I was telling you earlier, one credit pull affects your credit score 2 to 5 points. Why is that? Why is it that when they pull your credit, or when I pull your credit, does your score drop a little bit? Simple. Credit bureaus did a study years ago, and what they found was that people who filed for bankruptcy, let's say they filed for bankruptcy here's a BK, okay? I'm gonna draw a line like this. And this is 12 months ago. In the 12 months preceding the bankruptcy, for that 12-month window leading up to the bankruptcy, people who filed bankruptcy had their credit pulled 8 times more than people who did not declare bankruptcy. I'll give you an example of what I'm talking about. When I was drowning in debt years ago, it was back in 2009. How's this one for you? 2009, swallow this pill. I had $600,000 in credit card debt. How's that one? $600,000. And yes, that was all business debt, by the way. I was traveling to California to do seminars. I was doing, oh my God, I was all over the place trying to generate business and drum up business, man. Charged $600,000 on my credit cards. It wasn't fancy cars, fancy clothes, going out, whatever it was, man. It was business. And if you run a business, you get what I'm talking about, man. It gets tough to run one. Anyways, back then when I was drowning in debt, when I received a pre-approved credit card in the mail, I was like, open that mail, boom, get my credit pulled and go. Because I was drowning in debt. Bankruptcy was a very real thing. I almost went bankrupt. I didn't, but I almost did. And I didn't because I knew that I would not be able to get a lender's license if that was the case. So thank God I didn't do that at that time. But in the 12 months leading up to it, I almost went bankrupt. When I was drowning in debt, I'll tell you what, I used to get my credit pulled all the time because I was applying for everything, okay? Today, I'm out of the hole. I never went bankrupt. I paid off all the debt. If you're struggling today financially, I get it. That was me, okay? And I'll tell you this, and I tell this to a lot of people. If you're struggling financially, I was there. I'm with you. I was there myself. But I will tell you this, you will dig yourself out, but you gotta create action and activity. You have to take definitive action immediately starting now. Stop feeling sorry for yourself. Stop laying in bed being depressed. Stop being paralyzed by all of this stuff. I have a lot of different videos on my YouTube page. Make sure you watch, subscribe, and share, and like, and comment, and do all this other great stuff for me. Helps me out too, by the way. Anyways, you want to keep paying attention that when I was drowning in debt, leading up to the bankruptcy, my credit was pulled all the time. I'm out of debt. I'm debt-free today. Do you want to know something? My credit still gets pulled a lot, actually, because I'm a lender in 45 states, so these different investors pull my credit. But people who are not going bankrupt get their credit pulled 8 times less. That's why the credit bureau attached a risk factor to the credit pull, because if you're getting your credit pulled a ton, you might be on the road to bankruptcy. If that's the case, that might mean that your score should be going down because of those, because that's dangerous. It's a higher risk. So there's reasons behind all of this stuff. Pay attention to it. There is a lot to this. I have a lot of other videos doing a lot of other things. Those are the 3 basics of buying a home: credit, income, and money. Credit determines if you can even get a loan. Income determines how big of a loan you can get. It takes a little bit of money to buy it. Pay attention. Each one is broken down into 2 different parts. A great loan officer, and a good one somewhat, but a great one knows each one of those angles. They know all the different parts like this, especially ones that do presentations for you. So have questions, call me. I'm easy to get a hold of. And you know what? I'm going to write it down like this before I leave you. And I would say that I'll leave you with a song where Randy Rhoads played the guitar. I love Randy Rhoads, Ozzy Osbourne tribute, like one of my favorite albums of all time. Anyways, that's my phone number, 216-780-1103. I'm licensed in 45 states. I know what I'm doing. I answer my phone. I explain everything to you. I educate you. Subscribe to my YouTube page. Check it out. Let me know what you think. Catch you on the next one.